Wall Street has returned from the long holiday weekend, and we are seeing red for the equity markets, the U.S. currency, as well as bond yields. Joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, we have plenty of event risk, and therefore lots to talk about. We have the inauguration for the U.S. president at the end of this week, but we also have central bank speeches, the ECB, and earnings reports. So what do you think is the most important thing to remember as we head into the week?
I think right now the real focus is on Davos, and we're getting a lot of talk out of Davos about the possibilities of trade wars, et cetera, et cetera. And of course, the president of China basically chimed in on that. And I think he did a pretty good job on it. I think he was quite... he hit the nail on the head in saying that, trade wars are not good for anyone. They're not at the best interest of anyone. And so I think that's what the market is really a little bit worried about. We had a day off yesterday, and of course we saw that the markets were lower yesterday on the fall of the British pound. And of course today the Prime Minister of Great Britain basically cleared up some of the confusion, even though she has indicated a British exit, but she certainly indicated that that Great Britain will leave the European Union. But however, they will try to negotiate and get the best deals as possible.
Well, Peter, you mentioned trade wars, and of course everybody had paid attention to Donald Trump's comments in that Wall Street Journal article, but it's nothing new that the U.S. dollar is strengthened, and eventually with that dollar strength that will affect global trade. Another thing I think is on investors' minds is whether or not the Trump rally is over. So what do you think?
Well, I think the Trump rally is over. I think the big question now is, where do we go from here? If Trump does water down his campaign rhetoric and it doesn't become reality to the point that it can cause major global damages, then I think that the market will stay healthy and continue to do well on the basic fundamentals of a pretty good economic environment, and still low rates of inflation and still low rates of interest rates.
And Peter, last but not least, earnings season has just kicked off. So far, what do you make of the results?
Well, so far, we only had in a handful of significant earnings, and so far they've been pretty good. Morgan Stanley certainly beat by a wide range, and we saw United Health Group also beat. So I kind of think by the end of the week, when we have some of the other large cap companies reporting, that we'll probably have a better gauge as how the earnings season is shaping up. And I am confident that we're going to see earnings growth somewhere between 4 and 5%, which is a strong positive for the stock market's fundamentals.
Okay, Peter, well, thank you so much for insight as always, and I look forward to speaking with you after the inauguration of the president next Monday. Thank you very much for joining me.
Thank you.